wanted to do quick market review here, guys, on this video here. Basically want to explain the vacuum theory on the SPX, which is where we're at now. And just wanted to start off with looking at the spider here. This resistance line actually needs to be adjusted. It's 115, needs to go up a little bit. So we've still got some room here. We've finally broken out of this range. So far today we've hit 114.18 on the SPY. We're running a little bit of price by volume resistance here, not a whole lot. But more wanted to take you over to the SPX. This here's a daily chart of the SPX with a great inverted head and shoulders setup here. And you know, really nailed this bottom here at 1039. And I'll be the first to admit that on the last day that we were at 1039, I did lighten up. You know, I took off some Amazon right before it went on that 20-point friggin' run. I did lighten up a little bit there, but I had a lot of longs and have caught this trip up higher very well. And one thing that's really impressive to me today on the cash is the 61% Fibonacci retracements at 1140, and we walked through it like it wasn't even there. We based out on top of it for 5-10 minutes, and we're launching higher. Basically, I'm looking for 1161 to come pretty fast in the SPX, and 1161 is no joke. That's major resistance, not this 1130 that everybody's been talking about. You know, 1130 has been resistance for 3 months. Stock market's been trading for 100 years. 1161 is a lot more significant than 1130. But to the original point, why I wanted to do this video, and there's a theory that I call the vacuum theory. You know, you guys out there might see me. I'll tag some of my charts with Kirby. You know, Kirby's a vacuum cleaner. The SPX, by breaking 1127, basically entered into a vacuum. You see this price by volume resistance area here? Look at how important it was right here. But you know, in late 09, we chopped around in this area. We popped our heads once. We dived right back into it, and then we went on the monster rally for the early part of 2010. We had a flash crash. We fell back into it. A lot of this chop is associated with this very thick and very heavy price by volume resistance. And that's why you're seeing all this chop. You're looking at the past year of the SPX. It's not voodoo. It's not ironic as to why this happened. Now, we're breaking above it. 1127 break is into the vacuum. There is almost no price by volume resistance between 1127 and about 1250 or so. If you remember back to 2008, if you were trading back then, it was a vacuum cleaner move down. And basically the theory is there was no buyers here. There's nobody stuck holding the bags back here. You know, longer term holders. So by entering into the vacuum cleaner and breaking 1127, I'm looking for new 52-week highs, which I have been looking for all summer. But let's slow down. The next area of major resistance is dead on 1200. That's the 200 period moving average on the weekly, which we have not been over since 2008, early 2008. So let's get up to 1200. We'll reevaluate then. My target, you know, ever since we broke 1000 on the SPX back in 2009 was 1228, which represents the 61% Fibonacci retracement. That's still my target. I still think we got a shot of getting it this year. And it's a measly 80 points away. So if you're short, my opinion to you guys is run and hide. All signs are telling me this market is going to break out in a big way. And I've been calling this for a while. We've already ripped 100 friggin' points. And this market's a freight train. It reminds me of this move we had right here. And what's going to amplify that and help that move along is this vacuum. We don't have serious price by volume resistance coming into this market until 1350. And if you think the market can't get to 1350, then you need to think again, because it easily can. There's nothing stopping it. Where's the top? The top's at 1576. That's the highest the market's ever been before. That's the top. To keep trying to call tops is you're just going to get run over. Sentiment's changed. This market's going higher, in my opinion. Now again, we must be careful, as we always are. Careful at 900, careful at 1200. Doesn't make a difference. But all indications to me is we're going higher. We're into the Kirby. And all I can say